welcome in to another episode of Day Trader Thoughts with Trades in the Dark. Got a great show lined up for you today. Today's topic is do you have a trading strategy that you use? Also, do you know where to find one if you don't have one? We're going to review a couple different sources. I always like to provide a couple different sources for our information. So we're going to jump over to YouTube and Investopedia just to give a deeper level of what a strategy is and how to find one. And I'll possibly give you somewhere where you can go where you can find a strategy that you can use for yourself. And find a strategy as a beginner, it can be a big task, but it's crucial to get it right, especially in the environment that we're currently in with the type of market that we're trading, where the market conditions are constantly changing. We go from bullish runs to all-time highs to kind of bear scenario to world events happening that put a lot of fear into the markets. So you definitely want to be able to have a strategy that you can use as a go-to, or multiple strategies that you can use so you can kind of adjust with the market conditions. So one thing I notice is for beginners, and I notice from experience, this happened to me. There's so much information out there that I struggle to block out the noise and block out people's opinions and kind of sort through all the different terminology and different things that people would say when it came to trading. And a lot of times I just didn't know where to go or where to start to find like a base for a strategy. So I want to help people who are in that position now so they don't go through what I went through, and it won't take them as long to kind of just get through those initial steps of finding out what a strategy is and also finding a strategy to call their own. All right, so we're going to jump over. Let me change the screen real quick, and we're just going to pull up Investopedia. There we go. All right, it should be visible on the screen now. What is the trading strategy and how to develop one? This is from Investopedia. This is a recent article as well, August 13, 2024. So it's a key topic. This is a hot button topic, I would say, when it comes to trading. So I'm just going to go to the key takeaways. I can link this in the description of the video if you want to go to this specific page and read into it a little bit further. But their key takeaways are trading strategy can be likened to a trading plan, which I totally agree with. Trading strategy typically consists of 3 stages: planning, placing trades, and executing trades. Funny thing, I just had a conversation about that, how we don't get enough information on how to properly execute trades. That'll probably be a video that I'll do sometime down the line. At each stage of the process, metrics relating to the strategy are measured and changed based on the market, based on changes in the market. That's true. I agree with that as well. Most trading strategies are based on either technicals or fundamentals. I totally agree with that. It just depends on the type of trader that you are and what you prefer to use. So if you prefer to use news, if you prefer to use current events, you would be more of a fundamental trader. And if you are a trader who looks at different key levels, you look at things like MACD, VWAP, you're more of a technical trader. So those are definitely 2 things. So they go into it a little bit deeper here, but that's just the first piece of information that I just wanted to provide about this. Now, let's see, I have it here. Let's get this pulled up. I got a YouTube video that I want to share. Got it here. I can put that down. All right, cool. All right, now it's up on the screen. This is S&B Capital. Let's see. I want to make sure I have it high enough on the screen so you can see. S&B Capital, they've been doing this for a long time. They're a prop firm based out of New York. They teach a lot of things about the market. They also look for traders that they can help bring it to the fold and who can trade for them. So they definitely have been doing this for a long time, lots of years, wealth of knowledge. So if you enjoy some of the things you hear in this video, I would say definitely check them out. It's just SMB Capital, and this is their channel.
Favorited tweet that I've ever had. And
let me set this up a little bit better. This is one of their I would say most popular traders that works with them. I'm not sure if he's still trading full time now, if he's more in a coaching role, but he has been a 7-figure and 8-figure trader on record. So he definitely commands respect when he is talking about trading, because he has the experience to back it up, and he can show and prove. So they speak really highly of him. Let's see where I want to start here. I think it's
edge. Say you go to the casino every day, whether it's blackjack, roulette, whatever, slot machines, no matter how good your risk management and your psychology are, no matter what you do, you will lose money if you have no edge. And so how did I come to this conclusion? Many were
I have to say this. Y'all know I got to say it. Fair use, fair use. Fair use for using this video. I don't want to get a strike, so definitely fair use. So I'm just going to sum this up quick so we can move forward, because I don't want to play the whole video. It's about 23 minutes long. But basically, he sent out a tweet, and his tweet, he just asked people what they were struggling with. And based on that, those responses that they got from those tweets, he was like, all right, maybe we should put out a video just kind of breaking down what a strategy is and what it's not.
Were asking me that. And so this is based upon tweets, daily report cards that are sent to me, and direct conversations with an assortment of traders in the retail trade.
Probably can jump forward here. So.
EV greater than 0. And so what's EV?
All right. So what is trading edge? So SMB, they call it edge. It's also known as a strategy. So you will see in a lot of their things, they'll intertwine strategy and edge. So to them, edge means a trader strategy has positive expected value. They call that EV, expected value equals win. But this is really good, where they break down the determination if a strategy is good or bad, because we can have a strategy and strategy is not profitable. In that sense, we would need to track it, find out it's not profitable, and then just move on from that strategy. But they do a great job of breaking it down here.
Expected value is the probability you win times the amount gained if you do so. Then you subtract out the probability of losing times the amount lost when that happens. Many beginner traders are fooled into thinking their win streaks are due to their strategy, yet then their loss streaks are due to shortcomings of psychology or risk management. In reality, their trading strategies don't have meaningful edge, and the win streak was just part of inevitable variance. A really great book on this topic is Fooled by Randomness by Nassim Taleb. I'm
gonna stop it here. I read this book. I listened to this book through audio, read it. This is a great book, Fooled by Randomness. Basically, that's what he was just explaining right there, where beginning traders, you can go on a hot streak and you can think that it's your edge that has you on a hot streak, but it could be a multitude of things. It could be the reason why you're doing well. It could be that you prefer to go long and we're more in a bull market, so going long is a lot easier. But then as soon as we either chop and go sideways, or if we kind of turn around and have pullbacks, you'll kind of struggle with that market. A good example of that, story time. A good example of that is during the pandemic, 2019, early 2020, we had the insane crash. I want to say it's around February. This is just going off the top of my head, so it might not be exact to the dates, but whereabouts it should be close. So around February, March, we had an extreme pullback. Lost a lot of gains. Then for the rest of that year, the president we had in office, Donald Trump, he every day, every news conference, he said the market is good. We're recovering strong. Yes, we do have the pandemic, but we're going to bounce back. The market probably went up as much as it will go up in 5 years in 1 year, due to basically just a combination of things. It died so much. And then you had us bouncing back, the recovery story. So a lot of people would just buy longs or buy calls if they were trading options. And once we got to 2021, we hit the highs. A lot of companies were overvalued. We started to pull back. And in 2022, people just couldn't deal with the change in the market. And unfortunately, a lot of them left the market and they're not in the market here today. So that could be an instance where there was a lot of random things that happened that equaled great results, but there was no true edge there to continue make money when the market conditions change. All right, so let's see what he's gonna say about
Kind of like
this.
the Bible when that traders rely on as they talk randomness and black swans and everything else. Very, very popular. And it really hits home on a lot of points that I'm discussing because so many traders, you're inevitably, right? If you were to flip a coin and it would be a 50-50 chance of heads or tails, you're inevitably going to go on these win streaks. And if you were flipping a coin and it landed heads, 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 at no point would you think, oh, that's just because I'm doing everything right. Then if it was tails, you wouldn't think, oh man, I just became overconfident, right? But what so happens with beginner traders is they get fooled into overinterpreting their data. Especially, what's so common is I'll hear, oh yeah, I was winning for 2 or 3 months, but now I've been on a 2 or 3 month loss streak. Well, guess what? Odds are that that's just kind of the correction of that inevitable variance. So how do we get you all some real edge? So first, to be clear, edge is rare and most is noise. I really discussed this in my broken slot machine video. There's only going to be a select few tickers and ops that are exceptional each day. Most of trading is a random walk, especially if you're trading tickers that aren't in play. You'll still be right 50% of the time or somewhere around there, but even with individual days with high win rates, that doesn't mean that in the aggregate, you're a winning trader, right? It all depends about in the long run and how strong that data is. So how do you develop these strategies? So first of all, a few prereqs. You almost always want to only apply these following methods to stocks in play. These are going to be the stocks that tend to have fresh news catalysts, exceptional technical patterns, or stocks that are doing massive volume with big price ranges. And you also want to be careful of hindsight bias. You can't just simply look backwards and think everything is so obvious in retrospect. You need clear, predictable criteria that you're going to be able to apply in the future in real time.
All right, so I'm gonna pause it there. The video title is here. You should be able to see it. How to develop winning trading strategies with real world edge. It's a really good breakdown. They trade a lot of different markets. So they trade futures, they trade options, they trade stocks. So sometimes when they talk about certain things, they will go into something that's specific to the stock market, like when he was talking about tickers in play. So that's more of a stock market thing he was referencing there. But definitely check out the video. Check out S&P Capital. They got some good breakdowns. They got some good detailed videos on going over trading strategies. But just piggybacking off of the last thing that he said, uh, beginners they can often feel pressure, and they can feel pressure from seeing other people doing well in the market. They can feel like they see things clearly in hindsight, which hindsight doesn't really matter that much because you don't have to deal with the emotions of how you would have felt when you were in the moment taking that trade. So, those are some of the things that beginners can kind of get caught up in. Also, not having a clear strategy, you can become emotional with your trading, and you can stay in trades longer than you should. You can jump out of trades faster than you should. We've all been there. I've been there. I've done it millions of times. Hopefully, I won't do it a million more times, but I've done it a lot where emotions got the best of me, and a lot of it was because I wasn't working with a clear plan. And a clear plan, like earlier when we saw on Investopedia, you have a trading plan, you have a entry point, and you have an execution strategy. And you put those three together. And when the entry point isn't there, you don't enter the trade, and you hold until, for instance, your trade is invalidated. That would be a reason to exit a trade. So those are just some of the things you can go through. You can also have issues with things like greed, fear, just excited to be trying something new with the potential to make a lot of money. So you could kind of throw yourself that way too. Another thing that beginners don't really get into that much is just back testing and validation. So, back testing strategies to make sure you should even spend the time using the strategy. I didn't do that for a while. I definitely was fooled by randomness. I really liked that book, but that book was about me. I had some very basic strategies that I thought you can always use. And so I would have some winning times and I thought they would always work. And market conditions changed and they showed that, those strategies were kind of basic and I just didn't have enough data to determine if I should still focus on those strategies long term. So what backtesting does and validating, it gives you a chance to kind of test it without losing money. You can fine tune things, you can tweak things that you need to change, uh, and then you can take it to the real world and put it into use. Then also it kind of limits, how many losses you go through while you're trying to figure out if the strategy is good or not. So now, as always, I always have a story to tell. So I'll tell you about one of my friends. When he was new to trading, he was definitely struggling to start out. He didn't start out hot like a lot of people do. He would look at a lot of different strategies. He would watch a lot of different people. He would try just a lot of different things. He would look at a lot of different tickers. But it wasn't until he kind of took a step back and just looked at what he was doing and kind of got a better grasp of his risk tolerance. And he developed a strategy that was based on him and what he saw in the market. Uh, so he then took those steps so he could start to see like consistent profits and see consistent wins. But he had to go through the process of kind of weeding out all the things he was taking in. He was taking in too much information and taking in all the information. He was kind of all over the place. And then once he started blocking out the noise, that's when he was able to get better and grow. So, big takeaway from that is just remember trading strategies are not one size fits all. One person trading strategy doesn't mean it's just going to translate to you and you'll be able to use it the same way because it could be based on their personality. So, another thing that when my friend started to see results, it was because he was back testing the strategy. He was validating it. He was tracking it. He was, he knew the data. He knew when trade worked, how often it would work. He knew how many winning trades he would have before he can have a loser. He really knew that, and that's what kind of made his edge kind of grow and get better, and him had his confidence grow in using that edge too. So I would say, that's like a testament to the importance of finding a trading strategy that aligns with your needs and also aligns with your personality. Because the trading strategy and the trader have to be on the same page. That's like a coach and a quarterback. One wants to run, one wants to pass. It's just not going to work. So, how can you identify a trading strategy? I would say start off. You can look at basic things. You can look at patterns. You can look at double tops. You can look at double bottoms. Those are kind of more, I would say, beginner things that you can look at just to kind of start to see things in the market and kind of know what to look for. Like, oh, let me see what happens when this happens. You can see if those things work for you. You can also look at things like opening range breakout trades. So some of these just kind of, if you're new, just kind of search some of these and then, search them on Google and you'll get information popping up about them. You can do like an opening range breakout trade. Some people look at the opening range as the first minute. Some people looking at opening range as the first 15 minutes. And they wait for that first 15-minute candle. And then if the next candle opens above it, then they'll, get into an upside trade. If it opens below that first 15-minute candle, they get into a downside trade. If it opens within that first 15-minute candle, they'll hold off and they won't take a trade. So those are just some of the basic trading strategies that people use. But don't be afraid to test out a lot of strategies and test out, don't use them live, but test out a lot of strategies, back test those strategies and kind of tweak them until you find what works for you and what you feel comfortable, using. Because some of the keys to an effective strategy is you have to be willing to enter the trade right away when the setup happens or you see your strategy play out. You got to be willing to enter it right away. So that's why it's so important for you to be comfortable with that strategy because there's nothing like you seeing your setup, you not entering, and then that setup going your way, and you just sat on the sideline. So in some cases can be harder pill to swallow than if you just got in a trade and it didn't go your way. So you definitely want to find out what you're comfortable with, take those trades, back test it, and then start using it live after you back test it. And then also you can look for reputable sources who aren't trying to profit off of you to give you information. That's why I reference S&B Capital. They do have trading workshops where they break down different trading strategies and they give you the information and they're free. I'm not affiliate of S&B Capital. I don't get anything to say that, but I noticed that they are one of the groups who actually trade. They do this for real. They're a legit company, and they also give back information. So you want to try to find those type of companies, especially when you're in the learning phase, because a lot of times what we think is we can just pay somebody and we'll shorten that learning curve. Unfortunately, that doesn't really work with trading, because in trading you have to understand what you're supposed to see to enter the trades, and you can't get there without screen time. So you can't really shortcut this. This is a long process. Look at trading like starting a new business from the ground up. It's going to take time. It's going to take effort. It's going to be heartbreak. It's going to be wins. It's going to be losses, and it's going to just be a lot to follow from there. So that's the end of my little mini rant. But that's it for this video. Thanks for watching. Let me know in the comments below if you have a trading strategy, how you came across that strategy, if you're looking for a strategy, and if you watch anything from S&B Capital, and if got anything good from it. So just want to hear how you feel about this series. This is the series for the beginner. A lot of times when you're in trading, you get a lot of people who have an interest in trading and they kind of don't know where to start. So this series is kind of tailored to that new person who kind of wants to get into trading, and they don't have to put up a monetary value. They don't have to put up money to learn. They just have to put up the time and the effort and work for it. So that's it for today's show. I won't be doing a bonus show tomorrow. I might do a bonus show next weekend. Going back over the bot and just being transparent and talking about how the bots have done so far. Kind of thinking about it as I come up with new topics. And also, if you have questions or if you have ideas for topics that you want me to cover, you can also put that in the comments as well. I'll definitely take a look and see if we get something that a couple of people have interest in that we could review and cover, especially if it's something that I have some experience working with. So thanks for tuning in. Like the video, subscribe to the channel, hit the bell icon so you can be notified when new content is released. Peace.